everyone, this is Souradeep here. Hi, uh, can you hear my voice? Can you please let me know at this moment that if my voice is audible to all of you? Sure. Thanks. And you can see my screen also, right? Yeah. So this is the market post-market analysis that we do. Uh, that is the first half an hour today will be taken by me, and then 15 minutes will be by Vivek sir, and then Kaushik will take the later half of after 6:45. So I will discuss the global and the domestic context of the market and what market is likely to do on the next week, right? So for those who are very new to this session, I want to tell you that in this session we generally don't take questions because the time is very limited. We share our views about the market and we talk about how the market will possibly will pan out in the next 1 week. Okay, and today is Friday. Now, before going into the market analysis, I would like all of you to look at this data because this is a very important data. Okay, now, as you can see, this is the core retail sales. That retail sales, as you can see, has come in USA a very good amount of retail sales, and that means that US economy is not actually doing badly, as we have seen in the that month-on-month retail sales. If you see that it has grown 1% compared to the expectation of 0.8%, that means US economy is doing very well. If one more data point that we need to look at here is that came on the last 2 days, and that we have discussed in the club and with the TMP participants, is this number. Okay, this number, uh, just a second, the US CPI number. So US CPI number came 9.1% Y on Y. So we have seen that this has been very elevated, and after that market became very volatile. Dollar index strengthened a lot. This is very high. Okay, and some people were earlier saying that the prices of the commodities that have come down in the last month, as you can see in the month of June, commodities actually fell very sharply. All commodities, copper, crude oil, even talking about zinc. This is monthly chart. Okay, this is also monthly chart. Iron ore also monthly chart. So we have been seeing that the commodities have been falling. So a lot of people say that the pass of the inflation of the commodity price drop was not in the US economy, but you can see the PPI, that is the producer price index, that came on the very next day, was also 11.3%, which was again does not come with the kind of fall that we have seen in this industrial commodities, and not only that, in the agri commodities, as you can see in the from the month of June, what kind of fall they have happened in all the agri commodities. We can see that has not been reflected in the US inflation number. So as we can see that the US retail sales, as we can see in today's data, continues to be 1% higher. So the US economy is doing great, and at this point of time, so the rate hikes that is going to come on 27th of July is going to be quite a big jump, highest in 30 years, and that can be a jump of around 100 basis point. There is talk about. And there is one important point in this dollar strength. What is happening globally is that if you look at the forex reserves, our forex reserve have been dwindling. Right, our forex reserve were in the last November $642 billion, and it has been coming down steadily, as you can see, from 642 billion dollar, and we are falling quite a lot. So on the macro front, there are worries. If you go to the economic calendar today, uh, see, all data are not only US data are good. But if you look at the data that came today, initially the Chinese data, I don't know why they are not showing here the Chinese data. the Chinese quarter to GDP actually shrank much more than that was expected. Chinese June industrial production was again lower than expected. So everything on the economic front doing bad, and inflation, high inflation in USA, though inflation USA is doing good economically, huge rate hike that is expected, and that is why there is a macro worry. See, I would like to show you some of the messages that were shared in the StockEdge social. This is the StockEdge club. Okay, so if I go to the stock ideas, a few of the messages that were shared, and that actually shows the gravity of the situation. Like, this is 27 trillion. Okay, in the Twitter, I could correct, in my groups, I could, TMP groups, I could correct, but here there is no edit option, so I could not correct. Actually, 27 trillion is the US private debt. Now, please understand, if suddenly the interest rate goes up from 0.5% to 3.5%, on this 27 trillion private debt, almost 800 billion is goes for higher interest payment, and that is 4% of US GDP. So the time for going forward in the US and globally is going to be very tough economically. Okay, it is going to be very tough economically, and after the GDP, after the inflation data and all these data that they're coming out, we expected a very sharp fall in the US market. I will go here just a second. Okay, let me open the appropriate window. So this is the global market that I need to show you. So given the macro scenario and given the results that are coming in USA, or the bank results, they are being bad, we expected a very sharp fall in the US if we look at in the US market Dow. Now what Dow did is that after this data, Dow had actually fallen. Okay, Dow had actually fallen from 31,200 to almost 30,000 or 30,100, but yesterday it formed a hammer, and it is trying to go up. Now, market has its own mind how it wants to behave, but the factor is that we have a Fed policy on 27th of July, and we are possibly going to. This is the time actually. Okay, so 27th of July, around here we are going to have a Fed policy. These were the earlier Fed policy, as we can see. Around the fourth Fed policies, sometimes after the Fed policies, sometimes before the Fed policies, there have been quite a bit of selling. So expecting a similar kind of selling possibly before or after the Fed policy. So we have to be vigilant about what market does. So as we can see in the Fed policies, the market has actually reacted very bad. Sometimes after the Fed policy, sometimes before the Fed policy. And if a market actually breaches 29,620 in the case of Dow Jones may come in this region and take support in this region. This was pre-pandemic high of 29,500. If this level is broken, Dow Jones can fall much more. That is the recession scenario that we will see later. Okay. Now this is now I will come back to the Indian market. As we can see, regarding the commodities, I have shown that the commodities have been falling because the Ganesh ji, that is Vivek sir calls it the dollar index. Okay, the dollar index have been rising very strongly. So you can see that dollar index, how it did. It went above till 109.29 kind of level yesterday. Why? Because the euro had breached 1-to-1 parity, and that's why you have seen that the dollar index at that point of time had gone there. Now there has been a little bit of profit booking. One thing that is very surprising to me, in spite of such high inflation, the US a 10-year bond yield is not actually behaving in a very, I would say, the bond yield is not bullish. That means bond yield is not going up. So possibly market is expecting that this inflation that is we are witnessing possibly is a short-term phenomenon, and this will go away. If I go to the US, this is around 2 point, as you can see, this is around 2.9 to 6. If I go to the US 2-year bond yield, US 2-year bond yield, just a second. Yes, United States 2-year bond yield. This is an 3.126, and that was a 2.9 something. So the 2-year is higher. This is called inversion. When 2-year is higher than the 10-year bond yield, and this is called the inversion. And in this inversion scenario, this is generally a recessionary scenario. But global market is not actually in a mood to fall. I will show you. And among the global market, if you can see that US markets and Indian markets are at top. Okay, Nifty, Bank Nifty for last 20-25 days, if you can see this Indian market Nifty, you can see Bank Nifty and the US and the Nikkei. These are the best performing markets. While you can see all the global markets have been falling very, very sharply. Okay. Uh, IT stocks, Nifty IT. Surprisingly, Nifty IT is doing such badly compared to what US 100, that is NASDAQ, is doing so brilliantly here. So there is an anomaly between IT sector in USA and India, and globally Nifty, Bank Nifty are presently the best performing indices. Okay. Uh, though this is contrary to the logic of the macroeconomic data that we are getting, macroeconomic logic that we are getting. And among Indian market, if you can see, as we discussed in the very last week also, that these two sectors, that CNX Auto and CNX FMCG, are doing really good, and all other sectors are a little bit lagging. So market is being pulled by mainly CNX Auto and CNX FMCG. So uh, let us discuss few of the stocks that we discussed with our students this very week. So this is the Titan that we have given today. Possibly Titan will go up a bit from here, looking bullish. And as FMCG is doing good, at RSI is in a good shape. So Titan is a good stock that seems to be doing well in the next time to come, because the FMCG basket is also doing well. And though it is not actually FMCG, but Titan is a different kind of stock. As gold prices come down, as gold prices are falling due to dollar strength, you can see that this is going on the upside. Okay, and because the rupee is falling, because I should talk about USD INR here a little bit. So USD INR. So you can see the way the rupee dollar is moving, it has gone to almost 80.14 yesterday. Today it is at 79.16. So this is weakening. So people are rushing for gold because the rupee has been weakening due to dollar strength. And that is why the Titan kind of stocks are doing well. Another stocks that I discussed this is Lakshmi Machine. Okay, this stock look really good. I discussed Lakshmi Machine and it is going up. I discussed it here, and it is continuing to move up, and possibly it will move up more. The structure is good. The RSI has got into high momentum zone. This is moving up, and there is a double bottom. So as I discussed, that this can go to 10,600, 700 level. I gave it around 9,500. It has moved up on already 3%. It can move up more. Okay. Another stock that I have discussed, and I have discussed this in the club also. So this is the stock that I discussed when the stock was around 815, 817. This stock can go up, and fortunately in last 4-5 days it has gone up 40 rupees, because in this market not many stocks are going up. This has gone up slowly, but it is not a very high momentum market. It is going up slowly. possibly it can go towards 1050. Another stock I gave is Dr. Reddy. Not many stocks we are finding at this moment to give. So Dr. Reddy I gave when the breakout happened around 45, 50, 45, 20. It went up to 4600, not moving up, but there is possibility of Dr. Reddy to move up. Otherwise, now if I come back to the Nifty and Bank Nifty, so if I see the Nifty, it is very, very confusing right now. Below a kind of trend line like this, okay, right now below kind of trend line like this, and here you can see on the downside trend line. So a kind of if I remove this two, it will make a clear view. So very, very range boundish. There is no clarity because 15,800, if it is defended, possibly can again go to 60,250, 270. But I'm very skeptical given the fact that we are approaching the time where we would be up next to next week, next to next Wednesday will be the Fed policy. So there can be a sharp sell-off in market in any case. Okay. And if I talk about Bank Nifty has been overall better performing index than Nifty in the past. But Bank Nifty today formed a doji after a little bit of fall. So can see a little bit of up move. See, Bank Nifty, when you are going to trade from here, please remember that this gap of 34,300, 500 can act as a support. Once this is broken, Bank Nifty possibly will go for a more down move. If it is held, Bank Nifty can retest this 35,500 level. I'm very skeptical, not very sure what it will do because market is not moving in a very clear way at this moment of time. As you can see, every day only 100 point, 200 point kind of move. Today only 50 point up move, yesterday 150 point down move. So overall, the scenario is not very clear as one would like to be because there are multiple trend lines. So 34,350 can act as a support. Again, if I connect these three, then there comes a resistance also. So it is a little bit a dirty chart, I would say, without any very clarity in direction. Market is mostly range bound and a little bit volatile. The This was another surprise point that as we are approaching uh, this Fed policy, the VIX is at such a low level. Okay, I expected VIX to be around 2022 around this point because the Fed policy is coming. Because you can see around every Fed policy it goes up, shoots up like this. This was this time, and the previous Fed policy was at April end. So at that time also VIX went up. This time the VIX is falling. I expect VIX to go up next week and the week after. So that is the way. Now, among the stocks, as you can always know that TVS Motor doing well because the auto pack is doing well. Maruti, TVS Motor continuing to do well. Okay, Mahindra and Mahindra. So Maruti is here. Mahindra and Mahindra continuously doing well. Okay, now how long they will do well given the kind of scenario, because I will show you one important thing that is happening globally. If I go to the economic calendar, you can see these numbers. Okay, uh, as you can see, retail sales year on year is 8.42% in USA, which is huge, and really there would be certainly at least 100 basis point rate hike more from present, and maybe 250 basis point hike over the time before the inflation actually cools down, because now it is demand pull inflation, not only about the supply side, because supply side things have come down, but the demand is so high that you can see that year on year the retail sales are going on like this. Okay, now they want to pull down the economy, but what I was car registration year on year, Italian car registration down 15%. Okay, you can see car registration in Italy, car registration in In Germany, you can see it falling 18%. French car registration falling 14% year on year. So there is a global slowdown. Okay, only US and India packets or pockets. If you look at the global map, so I will go to the global map political. If I go to the global map political, okay. So let me open this. Okay. So if I go to the global map, there are only packets of. So if there is a global map, you can see right now, only there are pockets which are doing well. India, USA, and in the Europe, if you expand in the Europe, that is the United Kingdom. But globally, there is a slowdown. China is a slowdown mode. Russia is in a slowdown mode. The rest of the world is in a slowdown mode. I will like to show you a tweet that I tweeted. You will understand the gravity of the situation that we are heading into. Okay, just a second. So if I go to the Twitter, yeah, look at this tweet. Okay, now global nominal GDP is 93 trillion USD and global nominal debt is 303 trillion. 303 trillion globally total debt right now. Okay. Now, if on an average there is 100 basis point rate hike and there won't be 100 basis point, already we have seen a rate hike of 125 basis point. There are going to be more than 150 basis point everywhere. Conservative estimate is 150 basis point all across if global, because euro area won't hike much. On an average, even if there is a 150 basis point rate hike on 303 trillion debt, global debt, 4.9 trillion is taken away out of consumption or spending to meet higher EMI. You understand? This much is global debt. So 150 basis point if the rate hike, so 4.5 trillion is going into higher EMI payment, and that is taking away from spending and consumption. So that is 5% of the global GDP. If now spending in every sector goes down by 5%, spending in every sector goes down by 5%, you can see the kind of impact the global economy will face going forward. And that is the cause of worry going forward. I obviously we cannot deny the screen that market is actually rallying. Market is presently actually rallying. If I see here, you can see after the retail sales data were out, US futures are up, really up. If I show it here, US futures are really up. But what is happening is quite a surprise, I would say. Yeah. So this is US 2 year. So if so, what is happening here, you will see is quite a situation in a daily chart. If you see, there is a goodish bit of up move today happening after the United sales data. But what is going to come in the future is quite critical. Obviously, it can go up because this is a small range. It can go up uh, 300-400 point more, and possibly Nifty in that case, as we were seeing the Nifty chart, can go up maybe to this level, that is 16,200. But what beyond this? Because we are in the small range. See, this is a very small range. 16,250 to 15,900. So we have spent almost 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 days in this. We may go up, but within next 2 days also, we may still remain in this 300 point Nifty range. And certainly it is a very difficult to have an overnight trade apart from stocks if Nifty is having such a small range. And this has been the problem with the market. Earlier, market used to be very free flowing. If you see, apart from certain portions, earlier market, these are the post-COVID world. Even in the pre-COVID world, market used to be generally free flowing apart from few smaller time. But when market gets into this kind of range, it is really tough for traders to actually trade in a directional way. Obviously, they can take buy near the low, they can sell near the top, but again, who knows that it will not break this. So very difficult market with a small range. 4 5 stocks I have discussed try to be in this small range, in those stocks like Tata came that has showed you. Tata came. I'm repeating the stocks. Tata Chemicals looking good, still looking good. Lakshmi Machine, Titan, Dr. Reddy. So you can see these kind of companies which are supposed to do good. And apart from that, all the stocks in this basket of uh, Maruti, okay, Hero, Hero Motocorp any day can break out on the upside, and if you call TVS Motor, which did a very good move today, Bajaj Auto. So, and Mahindra, of course. So these are the limited set of stocks you should look next week on the upside. Indian IT, because of the poor results of the TCS, has been languishing, but very difficult to sell these stocks beyond this level. Okay, beyond this level, like TCS has fallen from 4,000 to 3,000. Infi, I would say, has fallen to 14,200. Its result is coming. ACL Tech has been one of the weakest and probably breaching below this. And Raja has given a bear put spread due to this can fall. Wipro, if there is a recession in USA, these stocks will fall more. So at very critical juncture and probably breaching. Wipro has been very worst affected stock. From 740 to 390, it has almost halved, which no other IT stock has done. I don't know what is ailing it, but this is how the market is poised right now. Weakness in IT and strength in what I would say in the FMCG and the auto stocks. So this was from me, my side. I will then like to hand it over to Vivek sir. Hi sir, can you hear me?
Hi, very good evening. Hello, can you hear me as well?
Yes sir, you are audible, but your voice is a little bit low.
Okay, just give me a minute. Yeah, is my voice audible now?
Still a little bit low, but better. Sir.
Okay, so I will be a bit louder. Yeah. Okay, good evening everyone. I hope you guys are doing good. I'm doing reasonably well as well. Welcome to the Friday session where we talk about what is happening in the market. Uh, we means we try to engage with you and give you our perspective about market, and also we share with you some learnings which we feel could be important for you if you want to trade the market or invest in the market. All right. So let me just quickly talk about the market, the broader market. So I do record these weekend strategies videos. So I don't know whether you guys are looking at those videos or not, but my weekend strategy is pretty much what I cover and I want to talk about. So let me just quickly take a broader view on the market. So this is my template where this is dollar, this is Nifty, this is Nifty, this is dollar. So, I mean, if you see, we have been doing these weekend analysis for a long time now. And people who have been attending this weekend analysis, they would recognize this line. And every time it has taken a support of this line, market has shown a sign of jitteriness. So the weakness in the market was quite apparent with dollar going up. And with dollar staying up, market is definitely sell on rise mode. Whether you like it or not, many people have positions in the market, so they don't want market to fall. But certainly market is on a sell on rise mode. But is market going to crash? My answer is no, because if market had to crash, it would have given a very, very bad fall. But since market is kind of consolidating in a downtrend, it will consolidate here for some time. My estimate is that, maybe till Diwali, I think market is going to stay here because this Russia-Ukraine thing, because in November US election is there. So if you type US election November 22, so US election is there in November 8th November 22, and it's a kind of a midterm election which is there in US. So not that this will have a very, very strong impact on the market, but see what happens. The US president, he is losing the strength overall. People are criticizing him for whatever he has been doing and not been able to manage the socio-political as well as the economic situations. So right now, as an economy, US is going through a turbulent time. In fact, if we look at the inflation data, so let's do macro analysis and let's see the US inflation. So this is your producer price index, which is very, very high and it's constantly going up. And yesterday also US data, inflation data came, which was bad. So overall, because the way Russia-Ukraine crisis was handled, the way massive money printing was done and distributed to US residents during the time of COVID. There was a free distribution of money, and that money eventually led to increase in inflation. So overall, I think the negativity around Biden is quite high, and looks like that this may continue for some time. So I am hoping that by Diwali we should see some recovery in the market. Not very convincing statement from my side because this inflation is really spoiling. So yes, but if Russia-Ukraine war it kinds of subsidize, then I think there is a huge hope because the day announcement will come that Russia-Ukraine war is kind of subsidized. I think subsidized. Then I think from there a decent recovery in the market can be seen. The good point is that this bugger crude oil has gone down. Uh, Whether crude oil will continue the downtrend will be again dependent on Russia-Ukraine. US has realized that the one of the main culprit of inflation is crude oil, and what they intend to do is they want to control they want to increase the supply of crude oil, which they can do in terms of WTI supply. So WTI is a US crude oil and Brent is a global crude oil. So if you consider US crude oil, US has strategic reserves and they have kind of decided to open it up. Last time when crude oil went up aggressively, US actually started exporting crude oil. It became a net exporting nation. So I don't know whether that will happen or not, but definitely US is interested in making sure that crude oil gets into downtrend. Whether the commodity has gone into downtrend or not, I think it's still early sign. I don't know whether we can call it in downtrend, but certainly crude oil has corrected, which will give some relief to the inflation. This is a very important level of crude oil, this one. Yeah. So let's see what happens to crude oil. If it goes above this and stays above this, then then I think we are in for some really, really serious trouble. So let's pray that this Russia thing goes away, because until as that goes away, market will not recover in a hurry. All right. The other thing which I wanted to talk to you guys about is the emerging market index, which is MSCI Emerging Market Index, which is composite of major emerging markets globally. Look at the downtrend in the MSCI Emerging Market Index. So India, actually, if you see India performance is outperformance. This is India divided by emerging market index. So India is actually outperforming. Whether this outperformance will lead to Nifty reaching new high, I have a doubt. I can see that this 200-day moving average of Nifty, which is round about 16,500 levels. I see this to be a very important level, a very decisive level for market to decide whether a new bullish momentum is getting built into the market. But this year is going to be a waste year, very honestly. ये साल कुछ अच्छा नहीं होने वाला है, पैसा बहुत नहीं बनेगा. Maybe if you are still trading the market, options is something which you can still look at with small positions. Or even if you are trading stocks, momentum, it has to be very small quantity, and it has to be for a very small trading portfolio. It could be for a small profit and loss only. Now, let us talk about the strategy which typically at this moment one should deploy. So, as I said that market is not in a very strong momentum. I will wait for 200-day moving average to cross, and at least in a week, they should be closing above this. So, a market if closes above these levels in a particular week, then I will probably start building my momentum. This is a market for investing, value investing, and people who have understanding of investing can find out stock ideas where you can invest. Or if you don't have any source of stock ideas, you can go to StockEdge, and here we are giving you stock ideas which may be of utility to you. So you can look at this section of StockEdge for stock ideas, for investing ideas. So broadly, my view of market remains pretty much there. The range is 15,800 to this top range, which is 16,250, and on top of this 16,500. The market is going to stay in this range. Yes, stock specific actions will happen. In fact, I would suggest this year do not look at Nifty. Look out, find out stocks where there could be origination of momentum, and we have given you some amazing scans. You can combine these scans and find out stocks where momentum is there. I mean, the recent one is the Vivek scan, which we have recently added. These are some really good outputs. You can combine these outputs and think about creating some nice combinations which will help you to identify stocks. For example, this is a combination which I was trying. Stocks where high ROE is there, high ROCE is there, consistent EBITDA margin, consistent sales growth, consistent cash from operation, and high increase in gross fixed asset. Okay, so why this gross fixed asset? Because I wanted companies where fixed asset has increased. That means companies have gone into capex. Okay, so you see the list of stocks. So these are the stocks where we are seeing some kind of a fundamental reasons. Now in these stocks, obviously we want to do technicals before we can judge this. So what I will do is I'll probably download this. I'm sure that a lot of you would be now knowing this whole process of downloading the stocks and making a judgment on these stocks. So this is the list, entire list. If I want perfect match, I will only look at these stocks, till these stocks which are perfect match. I will copy, and maybe I can add another watch list here. So let me just change my template. And I can add a template called new list growth. And let me just add those stocks here. Sure. So these are the companies where fundamentally there is some growth happening. Now I look at the chart and see which one is strong. And people who have not yet seen my webinar, please see my webinar. My relative strength model is explained in that webinar. For the sake of repeat, I'm repeating that my model is very simple. If RS 55 end of the day is greater than 0, then I'm only interested in this stock. So let us see which stock. Yeah, this. So Kaplan Point Lab, RS 55 is greater than 0. And my second criteria is 2-hourly RS should be greater than 0. And RS 21, which is EOD RS 21 period, should also be greater than 0. And super trend should be positive. So this is an interesting stock. Unfortunately, still trading below its critical moving averages. So I will not look at this stock. Let's find out some other stock. Lal Path, no. So I'm more interested in buying a stock when there is a momentum. Right now, these stocks may be trading at low levels, but because the momentum is not there, I don't feel excited to put my money in these stocks, because until unless momentum is there, there is no point in putting money. In fact, people who have been following me, they know this model, and I've been able to kind of give good exits to people who have been following, because if you follow a momentum exit, it helps you to exit earlier than the other people. So look at these stocks. Most of these stocks lack momentum right now. So you can only buy these stocks if you are a contrarian value buyer. Otherwise, I am not able to locate any stock where there is build-up of momentum. To certain extent, Extra Limited has some interest. There is a upward sloping RS, and 2-hourly RS is greater than 0, and this is showing some sign, but I will not go with a lot of quantity, maybe a small quantity. This is interesting, but my short-term RS is also not showing me positivity. So let us see which are the stocks. Britannia, look at this stock, Britannia. So this has been strong stock for some time, and although it corrected here, but then it has again gone up, and it is trading at a all-time high, not all-time high, near-term high level. So this is interesting. So for momentum play, if at all I have to play, I will play these stocks: Britannia, Nestle. Let me just mark them as green. SRF, no, not yet. E-Clark, can be seen, but it has to cross the major moving averages. Navin Flora, yes, looks interesting. Chai. PI Industries is amazing, and Tata Elxsi is reasonably okay. I mean, I still have to wait for this confirmation, but it's reasonably okay. So these are the 5 stocks which have momentum and which can be classified as growth stocks. So you can do all these things yourself. You don't need us. There are so many things which we keep on experimenting as combination scans, and we also share this combination as part of StockEdge Social. So people who are part of StockEdge Social, they know the idea sharing which we are doing there. And yeah, I mean, you just have to be there in the market, because when will market recover? When will it start giving more opportunity? You don't know. It's difficult to time the market, but stay in the market with small quantity. This is not the market to deploy large quantities. And I mean, I have seen this many times in my life, that after 2 years of massive money making opportunity, you will see 1 year of bad, dull market. So this is that year. I'm hoping that next year should be better than this year. All right. So thank you so much. Now I would like to invite Kaushik to take it over from me and give his perspective on market and share some studies with us.
Yep. Thank you so much, sir. I
Thank you.
hope I'm audible. Yeah.
So let me just quickly, you are audible. So let me just quickly inform our learners that Kaushik is leading the Elearnmarkets, and plus he's one of the mentors in the trading mentorship program. and he's extremely knowledgeable person in some advanced technical studies, which he'll share with you also. So in case you want to learn from Kaushik and other four mentors, and if you're still not part of TMP, please become part of TMP, because that's a very unique program which we have developed for serious traders in the market. Thank you, Kaushik. Take away.
Yeah, thank you so much, sir. So, I'll quickly go through all the sectors and what all the sectors are doing. So, idea is in next 5-10 minutes we'll go through all the sector charts, and we'll also look at how OI is building up. So, if you see, this is a Renko chart, and so 3% chart is majorly for a long-term view. So we use this chart for investment purpose. 1.5% chart, which is this one, we use it to identify a intermediate trend, which how the markets will be for next 3 months or a quarter. And 0.5% chart, the third chart, we use it for our swing trading purpose. Right. So the idea is simple. If the price is trading above moving average, it is bullish. If it is trading below moving average, it is bearish. And the direction of the triple moving average will tell you the trend. Simple, right? So this way we are going to analyze all the sectors. So we'll do it quickly. So if you see Nifty 50 trading above moving average on a longer term time frame, on a swing basis, which is a zero point 0.5 time frame, which is a third chart, price has just moved above the moving average. I'll zoom out the chart, and if you see, we have just crossed the moving average. So if the price moves above 16,160, we have some opportunity to go long in Nifty, but this will be a swing setup, right? For a week or so, we might see a bullish move if Nifty moves above 16,160 levels. So that's the idea for Nifty. So whenever we are checking Nifty, let us see how OI is building up uh, for the major index. So if you see here, PCR is 1.1. So 1.1 means it is slightly bullish. So anything above 1 is bullish and PCR below 1 is bearish. The quantum of the move in PCR tells you how bullish we are. So it is 1.1. That means it's mildly bullish. And here, if you see today, the maximum OI got built up at 16,000 levels, and majorly they were puts. So whenever we see OI built up, and in the chart on end of day basis, we have a assumption that it is by writers. So if you see at 16,000 level, you have major put writing. So put writing is bullish, and with that the PCR is 1.1. So we can say 16,000 level might act as an expiry, might act as a support for this expiry. We have to also see how markets turn out on Monday, Tuesday. But as of now, from the OI data, we can see 16,000 level to act as a support. And here also overall the chart of Nifty 50 seems to be bullish for a short time frame. So if we go to auto sector is super bullish. So whenever you see sectors which are super bullish, try to identify stocks, bullish stocks in them. And if you see any sector which is bearish, try to identify bearish stocks in them and keep trading. So idea is to always trade in the direction of trend. So auto sector is bullish. Nifty Bank. So Nifty Bank, if you see the smaller time frame is bullish, larger time frame is also bullish. The positional time frame is somewhere in between and sideways. But you can look at bullish opportunity in Bank Nifty. So now we are seeing Bank Nifty. So let us see how the OI is building up in Bank Nifty. So PCR is 0.8, which is bearish. And if you see today, at 34,800 there was call rating, 35,000 there is a call rating. That means 35,000, which has massive call rating, can give resistance now. So 35,000 call, 35,000 level might start acting as a resistance. Right, so you have to be cautious, and there is some put rating here which is 34,500, but it is comparatively lesser. So if you see OI of 34,500 in comparison to 35,000. The OI is less, right? But all the put writing happened today. So 34,500 might act as a support, but this is Monday or Tuesday we'll get a clear picture for the expiry. But tentatively, market will be somewhere in the range of 34,500 and 35,000. And overall chart setup of Bank Nifty seems to be bullish. So CPSC chart, long-term time frame, everything seems to be long-term is bullish. Mid-term somewhere is bearish. So CPSC will consider it as bearish as of now. Commodities seems to be slightly bearish now. Consumption is bullish. So consumption sector, identify trades, identify stocks which are bullish and keep trading in the bullish direction. Nifty Energy somewhere trying to create a bottom, but problem with Nifty Energy is the major weightage is with Reliance. So you have to be cautious that how Reliance is performing will give you a clear picture of Nifty Energy, but overall it seems to be bullish. FMCG in full swing bullish. So identify trades, see ITC, Britannia, and other stocks for a positional view, maybe, and trade based on your setup, right? But FMCG seems to be it is bullish. Nifty Financial Services, uh, the long-term time frame is bullish. The the smaller time frame, which is 0.5% daily, is also bullish. 1.5% chart, which is a positional view, quarter view, is somewhere sideways, right? So whenever a larger time frame is bullish and the smaller time frame is bullish, the mid-term time frame will try to align itself to a larger time frame. So financial services may turn bullish now. So you can keep on identifying trades in financial services. Nifty IT completely bearish on 3% chart, below triple moving average, bearish. 1.5% chart, intermediate, bearish, and also it is going to give a triple bottom breakdown, right? So it is extremely bullish on 1.5% chart, which is uh, intermediate time frame, and zero point 0.5 swing time frame, again it is bearish. So Nifty IT bearish, all the stocks bearish. So your view for Nifty IT should be bearish as of now. Infra is bullish uh, on 3%, 0.5% charts. MNC, so MNC seems to be super bullish now, right? So in any swing setup, good swing setup in MNC sector, you can look at. Media is bearish, long-term time frame, trading below moving average. Positional intermediate time frame is also bearish, trading below moving average. Short-term time frame where price is trading above moving average. So this can be a potential trap, and media you should look at from a bearish side. So Renko, the beauty of Renko chart is it helps you ride the entire trend, right? So whenever a trend is established, you can keep on trading till the trend continues. So Nifty metal seems to be bearish. Uh, Long-term time frame, mid-term time frame, short-term time frame, everything bearish. PSC sector bearish. The long-term time frame, PSC long-term time frame, 3% is bullish, but rest other charts are bearish. PSU sector, long-term time frame, trading below triple moving average, and intermediate and short-term time frame are trading above, slightly above moving average, but I'll consider this as a bearish sector as of now because the long-term time frame is trading below triple moving average. Pharma sector seems to be very promising because pharma might pick up from now. It is at triple moving average on a longer time frame, which is 3% chart. So chances that the pharma sector can give you a turnaround now. private sector banks, uh, price trading in a midterm time frame, there's a consolidation on 3% chart, and 0.5%, 1.5 mid bearish. So overall, the long term trend bullish is intact. Realities is trading below triple moving average, so we have to be cautious when going long in reality. Service sector is bullish. So now whatever sectors we have identified for bullish trade, uh, those are the bullish sectors, and you can try to identify bullish trades. So how we can do top down approach? So let me give you an example. Let's say service sector. So service sector uh, is bullish. So I'll go to my uh, stocks and I'll open service sector index, and I'll just scan what service sector charts are doing different. So Adani Green seems to be bullish, and you can trade bullish in Adani Green. So because everything seems to be bullish. So the students of TMP now will get an idea what I'm talking about and where to enter. So they know the setup. So overall, Adani Green is bullish. Adani Port is getting ready to go long. So this is super bullish. Apollo trying to turn bullish now, right? So it is at a very nice place, right? 5% at triple moving average, 3% creating a double bottom, 1% ready to move now. Right? So super bullish. So ETGL bullish. So you can identify trades from this sector because service sector is extremely bullish, and you can look for long trades, and sectors which are bearish you can look for short trades. Right? And every day in the morning I post a pre-market capsule. So idea is to share how Nifty will move. So the range of the Nifty, the breadth, some sectoral breadth we check, derivative analytics we do, what FI and DIs are doing, and a summary of the analysis. So I keep posting it in the StockEdge social every morning around 8. So you have 1 hour of time to do your analysis also based on what I've shared. So this is a reference document, you can use it. And yeah, so that is all from my end. And thank you all for joining in for the session. It was lovely interacting with you all. So I'll see you in the next session, uh, in the next post market analysis. Thank you so much for connecting in.